Silicon Valley Bank is no more.
The FDIC says First Citizens Bank and Trust will buy Silicon Valley Bank deposits and loans, and the deal includes the purchase of about $72 billion.
Report from Financial Times that UBS is in discussions to take over all or part of Credit Suisse.
So what we're seeing is that there's a lot of panic and stress in markets around Deutsche Bank. Shares fell as much as 15% today.
The Federal Reserve has raised interest rates again by another 1/4 percentage point. Today's decision came against the backdrop of troubles in the banking industry.
The rate hikes are being blamed by some for weakening banks, but Fed policymakers stuck to their stance that higher rates are essential for the moment to try bringing inflation under control.
So banks are failing and bigger banks are bailing them out. The equity markets are shaky at best, and the Fed just raised rates again, another 1/4 point. But with the Fed delivering the biggest rate hike in decades, we are still seeing the annual rate of inflation at 6% from 7.8% a year ago. But with all of this going on, the housing market is still staying unaffordable to many Americans, with prices retreating some, but not even close to where they were in 2019. So to make sense out of all this confusion, let's discuss all of it and how you can potentially benefit from it, whether you're looking to buy a home, sell a home, or invest in Florida real estate. So don't go anywhere. Hi, my friends. If this is the first time you've been to my channel, my name is Lee Brickey, and your best resource for everything real estate in Palm Beach County and the Treasure Coast. So if you're looking to buy or sell or invest in real estate, then you're going to want to subscribe because you're in the right place. This way you don't miss any of our videos. It's completely free. And for subscribing, here's a picture of Henry. So in February, we saw existing home sales break a 12-month streak of declines nationally. And this was due to mortgage rates falling below 6.1%. And if you've been watching my channel, I've been saying that there are a lot of buyers sitting on the sidelines. And as soon as mortgage rates begin to drop, we will see them starting to get back into the market. But then comes the Silicon Valley Bank collapse, and we saw buyers pull back thinking this was 2008 all over again. But what we're seeing now is drastically different. Not that it's any better, because what we're seeing now has to do with short-term liquidity issues and bad management of investments, where the 2008 banking crisis was no income verification loans, where buyers couldn't afford the home they were buying, which eventually caused them to default on their mortgages. And because these lenders have learned their lessons from 2008 crash, I believe they will begin tightening their lending guidelines, which is exactly what this article from Fortune covers. But to me, it's obvious that the Fed is taking these bank failures seriously with this statement that the banking systems are sound and resilient, but then signaling that the latest rate hike of 1/4% could be the last. Now, I have my own opinions of what happened with these banks, and I'm sure you do too. So feel free to leave them in the comments section below. But with that said, all this bad news on banking could be good news for mortgage rates. I'm hearing more and more experts in the equity market saying they are retreating to bonds from stocks. And that means bonds are on the rise, and the 30-year yield will continue to go down, improving mortgage rates. As you can see in this graph, the 30-year Treasury rate was over 4% at the beginning of March and now hovering around 3.7%. So what does this mean for the real estate market going forward? Well, that depends on where you are. And this is what is making people confused, because every market in the U.S. now is different. This article spells out that the 12 major markets west of Texas plus Austin, home prices fell this year more than 10% in January, and cities associated with the tech industry like San Francisco, where the median existing single family home price was more than 1.4 million in February, is now down from its peak a little over 2 million in March of 2022. And in Seattle, prices fell 7.5%. But then in Florida, we're seeing prices increases in Orlando at 9.3%, in Miami at 12%, where a slew of financial companies have moved in 2021 and 2022. And we're seeing that the two most expensive places to live now in the US is Naples, Florida, and Star Island in Miami, with a medium home price, get ready, of $40 million. That's the medium home price. And this article just came out touting a new study showing that buyers are still moving to Florida, with Florida having 5 of the top 10 go-to metros. And no matter where you live in Florida, this article by Narada Investments forecasting the next 5 years in Florida says that if you own a home in Florida, you have seen your equity grow about 80% over the last 5 years, and that the overall housing market in Florida is still strong and predicted to stay that way. So I am not going to begin to predict what is going to happen to mortgage rates moving forward, but it looks like we could see them improve from what the Fed and the equity markets are saying. And if rates do come down, the Florida real estate market will continue to see upward pressure on prices. I can guarantee that. And we could also see more and more buyers coming off the sidelines like we have already seen in January. So if you are in the market to buy a home in Florida, the higher interest rates are making it easier to negotiate with sellers and get closing cost credits if you need them. And new construction still has big incentives on spec homes, but those are beginning to dry up over the last couple of months, especially in Port St. Lucie. And if you're looking to buy investment real estate, we are finding opportunities if you have cash and willing to do rehabs. So those are the facts, folks. And my take on the future of the Florida real estate market from boots on the ground every day. But as always, I welcome your comments. So let me know where you believe the Florida real estate market is heading, and if you're finding any good deals out there. I know everyone wants to find a bargain, so sharing your experiences always helps others. And if you enjoyed this video, please give me a thumbs up. I really appreciate it. And if you have not subscribed yet, then you can slap that subscribe button right there and ring that notification bell so you don't miss any of our real estate tips and tours. And if you're looking to move to Florida and want to get a better understanding of the Florida homeowners insurance, that is a huge problem right now, watch that video right there. Be kind to each other, and I'll see you next time.